May profits be upon you. Welcome to another weekly Forex forecast. We're looking at the Aussie dollar, US dollar. Aussie dollar, US dollar. All right. Now we're looking at the monthly time frame. What does this look like to you? It looks like a mess to me. But is it bearish or bullish? Well, one could argue seems to be neutral, because we're coming right back to the middle of the pack, right? However, I want you to see something. After we made this high, and this is the low that led to that high, all right? And you can say this is the low that led to this high, pullback, boom. Once it breaks here, we are bearish. And then we have this high, making that low, and then this high. This one is lower than this one. We've just been hitting lower lows and lower highs for the longest. This is not a lower low. We didn't go past this low, so you can't call this a lower low, but you can in the short-term sense, not on the higher time frame swing structure. The swing structure is bearish. The swing structure is bearish. Once we broke this low here and we pushed up, did not make a new high, we came back into this range. We're playing within this range right now, and it is decidedly bearish. That's it. Doesn't mean you just jump in and start taking shorts. No, because the most recent the most recent price action is bullish. Why is it bullish? It's in a pullback. Why is it in a pullback? Because there was a bearish impulse accumulating down here. Not accumulating, but what is the word? Culminating. Thank you. Culminating down here. Right? And we have the pullback. We are well within correction territory to this impulsive move. Do you get what I'm saying? We have a structure breaking low here. Took out that structure here, right? And then we pulled back. So are you saying we're in an uptrend just because of this? No. The overall move is potentially a lower high for the next lower low. Can you see that? Can you see that? Sorry, I lost control of my mouse. We have a low, lower high, and then we have this consolidation here. All right, and you can see that we peaked above, sweeping buy side liquidity, then we peaked below, sweeping sell side liquidity. We took that sell side liquidity and we pushed up, but we have not taken out that high. As soon as we take out this high, that means we are back in an uptrend. That is a swing shift to the upside, a bullish shift in the market. All right, but we haven't done that. We are in correction territory. This could very well be the next lower high to the next lower low. If you don't agree, make sure you leave a comment and tell me what you think. All right, now, I don't like trading Aussie dollar. Why? Because of all of this mess. That is mess. All right, weeks of it. Each candle is a week on the weekly time frame we just switched to. All right. But what I want you to look at is how last week's candle closed relative to the week prior. We closed above that range. That tends to mean that the market will probably wick down and continue higher trading towards this candle's high. You understand? This candle's high. This is the new week. We're probably going to be trading towards that high because we closed above the range of this candle. All right. Now, I'm looking at the wick here, and it hit the 50% mark right on the dot. I mean, just right on it. All right. That's something I learned from ICT, of course. And taking this wick and saying 50%, treating it as a range and looking at candles that come after it to test it to see if it'll hold and bring price back down. Well, it hit last week, and what does that mean for this week? Let's go to the daily so we can get some clarity here. All right. Here's that 50% of the candle. Here's that precise wick to it on Friday. I believe, and this is my honest opinion, this is a big old supply zone. And the wick up here took out liquidity here, took out liquidity at this high, and I think there's a good chance we may be heading down. Now, there is a bullish fair value gap here. That price could come back into, find support, and push higher from. Or it could fail and turn into an inverted fair value gap. What am I doing? Stop it. All right. It could turn into a bearish fair value, an inverted fair value gap, and we could see price do something like this. Use it as resistance for lower pricing. Why would it come down to lower pricing? Because it's attracted to these relative equal lows over here, including this low here. That's why. Why would it go higher? Well, if it continues higher, if this bullish fair value gap is any indication, in this succession of lower highs, if it's broken, if price takes out that high here, I'm not looking for shorts. I'm going to start to think longs. That's it. That's the bottom line. I'm going to start to think longs if we trade above that high, which is located at 0.6580. Okay? So I'm looking for this high to hold. I'm looking for this high, actually. This is the protected high. I'm looking for this protected high to hold. I'm looking at this as an area of supply, and I'm looking for price to quite possibly head down from here. Now, if you're arguing that this fair value gap is showing you, indicating bullish order flow and that we could continue up higher, yes. But just remember, we are in a higher time frame downtrend. And I showed you that these are lower highs. All right. If you draw a trend line, it's looking pretty bearish. All right. Don't be fooled by the uptrend, because this could be just a pullback, a correction to the last impulsive move down. That's all I'm saying. So bear this in mind. If it breaks that high, if it trades above that high, then we'll be looking for longs. But right now, we are in correction territory. This is the correction, and I'm looking for the next impulsive move down. I'm looking at this to be the possible next lower high. That's it. If it's not, it'll go up this way, and that'll be a market structure shift to the upside, and I'll be looking for price to pull back into whatever area of demand is over here. That actually would be somewhere like, it would be looking like this. All right. If it comes back down here, I'll be looking for that. All right. So, because there's two down closed candles, and we're pushed up. Yeah, for sure. You can look at that as an area of demand. All right. And price could come back down and touch into that. We'll see if this fair value gap holds. All right. I would love to look for shorts in this market, but I would wait. Until I see a sure enough market shift to the downside first. Is there any clue of that on the 4 hour? Yeah, there is. Just look for price to trade below. Where is this? This is at 6520. 6520. Look for price to trade below that. I'm talking about a break and close below that. All right. It could react to this zone here, this demand zone here, for sure. All right. There's a demand zone within this daily fair value gap. There's some confluence for, sorry, I thought I was doing that right. There's some confluence to think, hey, the market may turn around right inside of this. There's some evidence for it, for sure. But we got to see if this is not going to be disrespected. We have to see that first. We have to see it. And until that happens, that I want to see the market give me something demonstrative that says we're heading down before I jump into sells in the Aussie dollar. I need to see something. I need to see the market structure shift here, and I would love to see this fail. This order block right here. I would like to see that order block fail so that I can see the pullback and then jump in right here. Jump in for prices to swing down to those relative equal lows down here. All right. I hope you found this helpful. If you did, make sure you leave a like or a boost or a comment or question in the comment section. Okay. I already put out 3 other videos: the pound USD, the euro USD, and the US dollar USD. I already put those out today. Go check them out. Make sure you are well armed and prepared and informed for the week ahead. I'll see you in the next video. Thank you for watching. May profits be upon you.